Hi there, welcome to the week ahead on the 25th of October. Today I'm going to have a look at just a few of the usual suspects. There's not that much going on in equity land, quite frankly. It's not that interesting where things are. So I'll have a look at Bitcoin and oil and gold and maybe a bit of the bonds after a bit of movement last week. So looking at Bitcoin, retesting the old all-time high with news of the ETF coming online. And really the only thing I'd be saying is not to get overly excited increasing position sizing around here. Obviously we're in a nice strong trend, an immensely strong trend in fact. You may remember I was sort of bearish here and was really expecting it to continue to that point of control around 34 grand, but it managed to find support, and unfortunately I don't keep tabs on things for you day after day, so when things move around I can't really come back to you to say things have changed. And if we look at what happened on this sell-off from that sell zone area of the whole wave, ultimately it found support before reaching that point of control. You can see on the weekly here that 20-week moving average coming in, and then it spiked here, created the weekly buy pivot. You can see there on that bar, and then it was off to the races again within that weekly trend. So it's at a point of massive resistance, and you should know of double tops and that sort of thing. So often the market will finish a rally by going to retest an old high, see what's up there, and if the selling is there, that can be the beginning of a bit of a leg to the downside. So it's just a bit of a higher risk spot around here. There's no confirmation of anything yet, and really a weekly sell pivot would probably be the first sign where I'd be getting a little bit concerned. So that would be a weekly close below last week's range. So below 59,500, a weekly close below there, and that would just be just a bit of a warning sign that the selling pressure is there, and that you potentially could see a bit of a double top with that old high. But really, you're still long, you're still happily long. If anything, if you've got a great position, you might be lightening up a little bit if you get that confirmation on the weekly sell pivot, just to give it the chance to just continue on, blasting up through that high. It could have a nice big spike to the upside. It's blue sky above there, so you do want to give it the room to move, but yeah, a weekly sell pivot around here, you'd just be a little bit wary. I certainly wouldn't be loading up here if you didn't already have a long-term position in it. And oil prices strong as an ox. This is Brent crude oil on a monthly. We have looked at this in the past. This is the high from 2018. And that's been my target on this move. You can see this nice strong trend, the 10-month exponential well above that 20-month simple. So we're in a nice long-term uptrend based on the moving averages. We've been finding support at the 10-month exponential, and it's really needing to test this old high up around 86, 87 bucks. Goldman Sachs has a $90 target by the end of this year. I think it needs to definitely break through there, but that's when you have that heightened risk of a bit of a false break before the next leg higher. But the fact is, big picture, this could blast through here, because if we look at that old wave from 98 to 08, really all this price action since related to that range, point of control around 78 bucks, which we've blasted through. So you can see, lots of buying support in the buy zone area, and selling resistance up in that sell zone. and returning to the point of control over and over. So if it does rotate through that point of control and cracks above there, there's not a lot of resistance, and you could actually create targets back to that $110 to $130 region. And a move like that would certainly cause some problems, I would say, with inflation, etc., taking off. But that is just from a purely charting perspective. It can actually just continue on to the upside through here. I think that's a low probability outcome. Usually you see these spikes, false breaks, and then it might ultimately head up there, but I think it would take a bit of time to get there. But really everything pointing up. And the US 10-year yields, they really are making it tough at the moment. My view is just simply that it's been in a range for a decade. That range from 2012 to 2014 from 1.3 to 3%. And all this price action since really related to that. We've got the false breaks of that range. And even this one I see as a false break, heading down to that area, which is the 618 below the range, and finding support there. And it's racing back into the range. And so I'm just calling above 1.8% in those 10-year yields. We should have a target back to 2.2%, but it needs to get above there. So it does need to break above 1.8% to create that setup. And we are seeing, with confirmation, they are bringing taper pretty soon, that we saw buying again. So it's really been quite tough lately. Whenever they confirm tapers coming, people seem to buy the bonds and the yield goes down. So we've got to watch that closely, and that will be supportive of gold, I think, if the yield curve flattens, if these 10-year yields actually do drop from here and don't break out above 1.8%, I think gold will really take off to the upside. So the risk to gold is, if it does turn up and crack that level and really race higher, and real yields go from negative, well, they'd still be negative, wouldn't they, based on where CPI is currently, but less negative. Gold may struggle, but the gold chart is actually looking all right. Looking at gold, it really isn't out of the woods yet, but it is at a point where it can start to march higher. So this is just the correction for the last few years. We've been watching this pretty closely. It's still in downtrend. That is the downtrend, and we've had this wave where the selling pressure came in as expected, but we haven't actually busted below the low of that range yet. And if the market can find support here, you'll see that based on this whole range, this whole correction that we've seen, we've got the buy zone of that range here, sell zone there, got the point of control coming through here, which is around 1875, and we are actually seeing the buying pressure out of here, but it's not able to really take off, is it, and retest that point of control as yet. But maybe third time lucky. We've had 1, 2 bouts of buying, and here we are with the next one with a weekly buy pivot a couple of weeks ago, and last week's price action didn't actually create the key bar. We needed to close above the high of that weekly buy pivot to create the key bar. So it's still a bit iffy, and the weekly trend is still down. So really I'd like to see this attempting to march higher, take out Friday's high. I really want to see it going up through that 1830 to 1840 region, and then it should be a pretty quick trip up through to 1875. And that could happen quite quickly if those dominoes fall. But it's not out of the woods yet, and the bonds are the linchpin, I guess. If they really do sell off hard, I think it's going to be a bit of a tough time for gold to really take off. But it's been constructive the last few weeks, and so I'm giving it the benefit of the doubt for the moment, that it does want to trade higher. And there's just a lot of little dominoes lined up here, where if it can break through, it can lead to the next dominoes and then can actually create a nice little rally. So it is set up to rally. I'm just a little nervous based on the bonds. All right, well, that's enough, I think, for this week. Enough to have a think about, and really equities themselves just drifting around, not much volume, and not all that exciting. All right, cheers. I'll come back with more next week.